What's interesting is that from 2009, when e-commerce actually became a thing, right? In 2009, e-commerce was 6% of all the retail sales. In 2019, that number was 16%, right? So the market grew, almost tripled in a span of 10 years. Now, during this COVID pandemic, in a matter of 2 months, that number went from 16% to 40%. Okay, so the industry grew by, again, almost triple, 2.5 times, just in a span of month and a half. Now what I'm seeing is a surge in people keeping more inventory, because they're like, what if something else happens? We have a product that people demand, okay, but we don't have enough of it, and we can't expect China to deliver when we need it.
What do you see logistical industrial doing to the price of industrial assets over time?
I see price of industrial assets going up and up and up in primary and secondary markets.
What's up, everybody? I'm here with Ned Mahic. Ned is a real estate developer and investor. He focuses specifically on self-storage and e-commerce industrial or logistical industrial. Ned, I'm going to read your bio directly from the page here so I don't miss a beat, and I'm going to turn it right over to you. It says here that you are an experienced real estate developer and investor. You've accumulated more than 20 years experience in acquiring, financing, developing, and investing in various real estate properties, ranging from condos, student housing, self-storage to light industrial across North America. As a business veteran, you have been widely recognized for your abilities in creating stellar growth in a sustainable manner. Believing in the power of people, you have developed your own success formula. Growth equals a scalable system plus empowered employees. Under your leadership, the revenue of a home services company in Chicago grew from $2 million to about roughly $25 million US within 3 years. And a student housing company in Montreal also significantly increased its assets under development with you in charge in under 3 years. So Ned, what did I miss? Who are you? Tell me a little bit about yourself.
This is what you've read. You're a pretty good reader, by the way. You're pretty on point, but I'll give you a bit of a, more like a step-by-step background. I came to US about 26 years ago now, I think, from Croatia during the war. And, I didn't have much to lose. I spent 3 years in the war. And when I arrived, I connected to the Croatian community, and I got an opportunity from pretty much like year one to get into C-class apartments. And I worked in C, I would call them even D, right? We would take stuff that was abandoned and turn it into livable places for refugees that were coming in from, Croatia, Bosnia, and Serbia. And essentially what ended up happening, there were several of us doing it, and it was under the lead of a guy, Mike Pavlovich from Chicago, who had been there 20 years prior. And what ended up happening is we gentrified some of the areas that weren't good, because all these refugees that moved in, they wanted jobs, they were working people. We would give them first month or 2 months in rent. As soon as they landed a job, they would pay on time, and eventually that area turned out good.
Right.
I sold out of that, and there was a point in time where I wanted to do something clean, because dealing in C-class, and especially when you're first starting, oftentimes you're unclogging your own toilets because you can't get a plumber late at night, or they tell you it's like $400, and you're like, I'm not paying $400 for this. So you go do the work yourself. So long story short is I went to do commercial lending for Citibank, and I created a small business within Citibank and commercial lending side. It was pretty successful. And however, I worked with a few developers, and I realized that there's a lot of money in development. So after a few years at Citi, I ended up partnering with one of the developers that I used to fund. And we developed a lot of condos in Chicago. I learned the game through working with this team, and the rest is history. Then after that, I developed apartments myself, not condos, apartments for rental myself. And after that, I went to Canada. I partnered with a student housing development company that grew its development pipeline from 10 million to 120 million bucks in a short span of 3 years. I was lucky to sell out of that business just a month before COVID. And when I say lucky is because they focus mostly on international students, and now that COVID's hit, I don't know how much of that is going to be happening. It still might be okay, but I don't know. It's not as clear. A few years ago, I've gotten involved into development of self-storage facilities for the simple reason that I thought the recession's coming, as many of us did. I didn't know COVID's gonna speed up the process, and the reason why I got into self-storage is because it's more recession resistant than most other asset classes. What I find is that during the recessionary times, people lose homes, they move, they lose jobs, they downsize their homes. And when this happens, they want to store their personal belongings.
Right.
So the occupancies, historically, occupancies have gone up, and the rates have gone up during these times. So I got into storage and also logistical industrial real estate. So that's pretty much a little bit about me. Giving it back to you.
Yeah, without a doubt. You mentioned COVID in there. So, I guess now we're finding that it was here earlier and earlier, but until some of that information was out, 2 months ago, we're living in a world where the economy is doing well. Most people are doing well, and everybody's happy, and we're looking forward to a great spring and summer, and of course, come March, the U.S. really gets pummeled with at least confirmed cases. As of today, we're at roughly 3 million and just over 3 million, 3,015,298 cases. The U.S. being almost an entire third of that in the world. And it's very interesting. You could go into the politics of it all, but bottom line, this is growing. The growth rate is definitely there. While the growth rate has been declining, which is super positive, it's a massive uncertainty, and it has impacted our markets significantly. You mentioned that you were in you saw some type of shift happening, right? Historically, it happens every 10 years. So you started to adjust into self-storage because you believed it was a little bit more recession resistant. And I know you were investing in e-commerce industrial and logistical industrial. I mean, can you tell me about what the direct impact of COVID has been for you in those asset classes specifically? I know you got out of student housing right before international could impact that. And that's why I wanted to focus specifically on the self-storage and industrial and logistical. I think that's a very interesting class.
So in self-storage, we haven't seen any slowdowns as of yet. We're not getting many new tenants, but the tenants there are not moving, right? But it's still early to tell. People have been locked up in their homes. I don't believe at this point our vacancies are where they are, and our defaults are where they are, which is less than 1%. So we're not seeing a drastic change. What we do believe is going to come as sanctions loosen up and people are having to pay. Like right now, people are getting behind on their rents and mortgages on their homes. As they get behind on the rents and mortgages, we know that usually about 6 months to a year later, people start moving. So we're expecting a surge in occupancy in our facilities. I've looked at that surge in 2008 to 2012. For example, from 2008 when the economy went down, the vacancy slightly increased, right? And then from 2009 to 2012, 2014, it was a huge decrease in vacancies and increase in rates. So there's a bit of a delay. At this point, we're not feeling much. On the logistical side, it's quite different. We're seeing some clients or some tenants who are having trouble, all right? But there's something interesting going on. And what's interesting is, I'll digress from the subject a little bit. What's interesting is that from 2009, when e-commerce actually became a thing, right? In 2009, e-commerce was 6% of all the retail sales. In 2019, that number was 16%, right? So the market grew, almost tripled in a span of 10 years. Now, during this COVID pandemic, in a matter of 2 months, that number went from 16% to 40%. Okay, so the industry grew by, again, almost triple, 2.5 times, just in a span of month and a half. And the impact on that is tremendous. I don't know if you're aware, but with logistical real estate, if you get rid of a retail space and you start shifting that business online, you don't get rid of the need for space. You get rid of the need for retail space, but you actually need more industrial space than you need a retail space. It's typically 3 to 1. So if you had a 10,000 square foot store that you're servicing, when you shift online, you actually need about 30,000, on average, you need 30,000 square feet of industrial.
Right.
And the reason is a couple of reasons. One, you need additional distribution centers, like multi-city distribution centers, which we own some. And the second part that you need is e-commerce is a return economy, meaning I don't know how you shop online, but let's say if I'm buying a pair of shoes, I wear size 10 and a half. So I buy 10, 10 and a half, and 11 in whatever style I'm buying. The ones that fit me, I keep, and the ones that don't fit me, I send back. And sometimes I send back all 3. So the stats are that, people on e-commerce return 50% of the items. So the warehouses have to have more space. Now, good news, rather than a retail store where you can try it on and know if it fits right away. Now, the good news is that the industrial space is a lot less expensive than the retail space. And I'll compare like Chicago and Montreal just to give you an idea. In Chicago on Magnificent Mile, you're paying $500 to $600 a year in rent, okay, per square foot.
Wow.
Yeah, so Magnificent Mile is one of the more expensive ones in the country, right? So it's $500 to $600 a year per square foot in rent. So if you shut down a store there and you shift it online, for Class A industrial in Chicago, you're paying $20 a foot, right? So yes, you need 3 times more space, but three times space is a lot less expensive. In Montreal, for example, the Class A retail goes for about $90 to $100 a year a foot, but then Class A industrial goes for $10 a foot, right? So even though you need more space, it's still a savings. So what we've experienced on the industrial side is that we're finding the logistical tenants, people who are in shipment of necessities, their businesses are increasing. And we're also finding that people who are not directly involved in the logistical game and have some space with us, their business is shrinking if they're not in necessities. So we've had people who've asked for relief of rent, but we don't just hand it out. We go through a credit check. We actually want to see their financials, and we want to see what's happening with them. If it's a business that's viable, that will stay, and they need a deferment for a month or so, or maybe a slight deferment, like a reduction in rent for a short period of time, we're doing it. But what's happening with our properties is we're having a huge demand on logistical companies that are expanding. So even if somebody drops off, we can quickly replace them with a new tenant. And one of the companies that we track closely is Prologis. They're the largest industrial REIT out there. They own about 1 billion square feet of industrial space. It's like 980 something million, but it's 1 billion square feet. And they've seen a surge. They've seen a growth in demand, 15% in a month of March. Now, 15% growth for somebody that large is significant. And we're seeing the same effects on our side. So, I believe that when the economy goes back to what they say normal, which is going to take at least 18 to 24 months, I don't believe that everybody's going to stop shopping online. I believe some of the older clientele who are 60 plus that weren't shopping online are not used to doing it. They were forced trained into it. And I don't know how much shopping you do online, but it's very convenient. I haven't purchased toilet paper or paper towels in a store for the last 3 years. I buy it on Amazon. Like, who wants to go to the store and carry, stuff? So, so I believe people will still shop for some stuff in retail stores, and I also believe that retail is gonna change drastically. I don't believe it's gonna die. I believe that the key locations in major metropolitan areas are actually gonna do better, because you still need a showcase place where you can go try stuff on. But then I believe the secondary and tertiary market retail is going to die off. So just to answer your question, in self-storage, I haven't seen much change, and we believe that there might be some increase in vacancies, but we believe we're going to fill up. And on the industrial side, we're actually seeing a surge up. Now, the advantage of being in industrial now is that there are some owners out there that are panicking, right? And we might be able to pick up some properties at a discount. So we're ready and willing buyers.
Yeah. I want to touch into 2 areas. Specifically, I want to start with self-storage, because I think I have a quick question there, a quick observation. And then I want to dive into the logistical industrial. With self-storage, it's interesting, my first initial reaction is, okay, if somebody's not able to pay their mortgage, they're probably going, or if they're strapped for cash, they're probably going to focus on paying their mortgage before they pay a self-storage bill. And I'm thinking, well, wouldn't that lead into a potential default in self-storage? And then I realized, well, self-storage is a totally different rule. You're playing by a totally different game where, if you're 90 days, if you default over 90 days, or I don't know what the timeline is, you're going on the storage wars or whatever, right? Those guys with cameras auction off all your shit. And so, looking at that, like, okay, so you're gonna pay your self-storage or you're gonna move out. And it's interesting because that was kind of my revelation there. It's like, wow, people really are going to be downsizing. They're going to have stuff that they don't want to get rid of yet, that they're not ready to get rid of yet, and that will be a bill that they pay, because they'll either lose it or and it's interesting. It's interesting.
It's actually 60 days. If you don't pay your bill in 60 days, if you skip 2 months, we don't call the guys to come and visit the property. We actually take photos of the locker, of what's in the locker, and we put it on an online site, and people from all over the world bid on it. Okay. And here's the best part, right? I mean, sometimes people win it and then they have 7 days to come and pick it up. Okay. And if they don't pick it up, okay, right now we're giving them longer because of COVID, right? But typically in 7 days, if they don't pick it up, we put it online again and sell it again.
That's crazy, man. And that's just a totally different world. And so, I was trying to figure out, okay, so where's the chink in the armor or whatever, where is that little thing? And I'm, with self-storage, it definitely seems like, especially, in a recession, that will at least tide through. I mean, real quick, before we dive into logistical industrial,
I'll give you a chink in storage. I'll give you a chink in storage. I believe for the short term that people are going to look at the stuff that they have in the storage. And if it's not something that they're emotionally tied to, and if it's not something that's important to them, they will let it go, right? So you will see a small increase in vacancies probably over the next 2 or 3 months, maybe even 6 months. But then after that, as people start defaulting on their mortgages, put yourself in somebody's shoes. You've lived in a house for 5 or 10 years. You bought all this furniture, boats, ATVs, whatever you're into, right? Art, whatever you own. Most people spend $100,000 to $150,000 in furniture and goods in your house. Now you're losing the house, and emotionally you're losing the most value. For most people, it's the most valuable asset of their lives. You're having to downsize and move into a place that's not your dream place. Do you want to get rid of everything you've accumulated over the years? Probably not, right? You're going to pick out stuff that means something to you, that you believe has value, whether it does have value or not, right? And that's when storage picks up. So short term, I do see some increase in vacancies. However, what's nice in storage, at least with us, we don't over leverage. So, our typical leverage is when we develop, it's 70% loan to cost. And when we're complete, we're probably at about 50% loan to value. So our debt service coverage ratios are at like 2.2, 2.4. What that really means is that we can lose like 40% of our tenants and still be okay.
Yeah.
So we're not as highly leveraged as.
Is that standard for self-storage, or is that your personal investment strategy?
That's been my personal investment strategy for the last couple of years. Okay, because I felt that recession will eventually come. You can make more money if you leverage higher, right? Meaning, during from 2012 until 2016, 17 even, I was leveraging as much as I could. But then I felt like, hey, things are getting expensive, right? And there might be a shift. So from 2017, I've been reducing the leverage. It affects the returns a little bit. But, our investors are making 15 to 17% a year, 15 to 18% a year with, 40% down payments. If we do a 20 or 25% down payment, that would be in mid-20s, but that's a lot more risk. So you got to look at, how much risk and reward is there.
So diving into industrial, e-commerce industrial, logistical industrial, clearly there's a massive shift that's happening when you look at the growth of retail. And I think that's undeniable. Online retail, that is, and that's undeniable, especially in a situation like this where you're not supposed to leave your home. You're not allowed. Some people still choose to. They're shopping online. There was an interesting point that I haven't vetted fully, and I'd be curious to run by you to see what your perspective is. But the demographics of people shopping online tend to be, and again, according to this one source, haven't vetted it fully. I'd be curious to see what your research has shown you, but tend to be, middle class and above. And it showed kind of lower income people tend to shop less online. A portion of the goods that they'll buy online would be significantly less than, say, somebody middle income and upper income. And as a sidebar there, you have a nation with growing income inequality and wealth inequality where the rich are getting richer and the people at the bottom are not necessarily seeing that same increase in their income as it relates to cost of goods, cost of living. How do you, and many people are saying that this transfer of wealth will only further exacerbate that divide. How do you see the growth of a lower income class impacting e-commerce? Do you think it's just a non sequitur because the amount of people spending that have the ability to do it are just driving that growth, or it's inevitable because it's technology, or what do you see in the demographics, and how do you see that having an impact in a recession?
I agree with you 100%, as in who used to shop online. Okay. So like my parents are, in their early 70s, and they never bought anything online. Okay. But now with COVID, they're having to do it.
Yeah.
Like they have no other choice. So people in lower income brackets and older people who are not shopping online, they absolutely refuse to do it, right? It wasn't something that they did, are now being trained to do it. So once, let's put it like this. I didn't want to shop online. But once I started doing it, it's so convenient that it's darn near impossible to go back.
Yeah.
It's like
You said
when
it's a
you improve
return buyer, right?
yeah, it's like when you first graduate college and you live in a dorm and it's like a piece of crap dorm and you have a couple of roommates and it's amazing. You have a great time. And then you move out and you get your own place, right? And it might not be much, but it's your own place. You never want to go back and live with roommates again, right? And then you upgrade and you live in a nicer place, right? And you have some conveniences. It's like going from driving your own car to having an Uber, right? I mean, I'm not getting into Uber now just because I had to dust off my car and pull it out. It's collected a lot of dust over the last couple of years, but it's like once you're used to something that's better, it's hard to go backwards. So you're absolutely right. People that weren't shopping online before and were the older people and lower income people. Now everyone's doing it, right? And the thing is, if you look at China, in China, probably about 80% of all the retail is done online. And the reason why is because they didn't have the infrastructure that we did. So they skipped that step and they went to shopping online right away. I believe that once we go back to normal, we might drop back off from 40%, but it's not going to go back down to 16. And over time, e-commerce will take over. Now, I believe over the next, 10 to 15 years, is going to become 60% or more. Again, I believe that the major centers are still going to have shops, but they're going to be more experiential. Meaning, I don't know if you know Glossier or Everlane or some of the new millennial brands. They have fewer locations where you can go try stuff on, but when you go there, they're really nice, right? They treat you well, their staff is trained well. So you fall in love with the brand and you can try on your size. And once you do, then you can just shop for it online.
Yeah.
Suit Supply is another one for suits. There are many brands coming out there like that. And I think that trend is going to continue. So hence, I believe that e-commerce is going to keep doing this, and it's going to keep doing this. So, and also another thing is the lower income people, years ago couldn't afford cell phones or nice ones, smartphones. Now everybody has a smartphone. Anybody can shop online. So it was just a matter of habit of them not doing it. But COVID has been a great catalyst to train everyone into. I got a little lucky by being in this industry.
Yeah, it's
usually
a catalyst for a lot of things, I think.
Yeah, usually I'm not that smart. I just tend to get lucky every so often.
Funny, and I want to jump into the next topic, but I'll share, a little anecdote. I'm looking for a mattress right now, and this is where the advertising works for you. So I just go on Instagram, and the first mattress ad I see, I click on it, and now every 3 posts I get a mattress ad. So instead of having to go around all these mattress stores, all I have to do is click on a mattress ad once, and now I've got 17 different mattress retailers all on my Instagram feed. And I'll just click on each one, and I'll read the benefits and the pros and the cons. And if I like it, I'll write their name down and read some reviews. Every day when I go on Instagram now, I'll see a new mattress ad, and the programs that they have where it's like, hey, purple and nectar, right? Those are the ones that I'm looking at because they look pretty. They look pretty cool. I like the purple, mesh pad or whatever, with the concrete falling on it. But, they'll send it to you and they'll let you try it for a year. And if you don't like it after a year, they'll send it back. Now, there might have been similar programs at other mattress stores before, but for me to be able to have free delivery, a free mattress pad, free sheets, have them deliver it and let me try it out for a year. And if I don't like it, they'll come back and pick it up without me having to leave my home. I still have a little bit of discomfort around not being able to lay on it first, but, looking at that, it's like, all right, maybe I'll try it out. And then they have these financing plans. Like I'll probably want to buy it outright, depending on which one I get, but they have these financing plans, 0 interest for 6 months, and your first payment 3 months down the road, and we'll break it up over 18 months. And, and then you're looking at it and you're like, wow, like, well, maybe I will spend, $2,000 on a mattress if I can break it up over 2 years, right? Like, I never would have spent $2,000 on a mattress before. I'm a young guy, right? So I'm not at that place in my life. But if I'm looking, I can pay it over 24 months. I'm like, well, shit. It's really not that much when you think about it. It's $100 a month for a better sleep, for a better back. And I don't know, very interesting. So it has changed my mind a little bit, but I do want to jump to a little bit more here in terms of industrial. So we mentioned the discrepancies in value per square foot for your magnificent mile to your industrial. I don't know what it's like in Chicago or Montreal, but I know in Maryland, industrial assets, are not nearly as, I guess, available for, specifically Anne Arundel County. There's like a few industrial assets available for purchase, and there's even fewer pieces or parcels of land. Now, we're a dense state, so it's a little bit different than some other places around the world. But when you look at the distribution centers based on density, not necessarily based on location, Anne Arundel County, Montgomery County, Howard County, which is like kind of your metropolitan counties right in between Baltimore and DC, they're extremely dense. PG County in there. As you go further south, you can get more land and expensive land, but when it comes down to the zoning to be able to build it, or at least the space to be able to have it, we don't have a ton of that. And what do you see? So really, bottom line, what do you see logistical industrial doing to the price of industrial assets over time?
I see price of industrial assets going up and up and up in primary and secondary markets. I believe that there's going to be an anomaly in the market right now because the industrial prices of cap rates have been getting more and more compressed. But I believe there's going to be a bleep on the screen right now just because of what we're going through, because people just don't know, right? They're not as educated as they should be. So we're actually going to raise it. We're in the process of raising a fund right now for industrial, and we want to buy stuff starting next 2 months. As soon as people start going back to work, we want to start buying right now at a discount because we see the compression of cap rates, and we also see the increase on demand on industrial properties. What you're seeing in Maryland is exactly the same thing that's happening in all the primary and secondary markets. And the reason why that is US was an industrial country through 50s and 60s and 70s. And in 70s, the industrial started shifting from United States, and it went first to South America, South and Central America, and then to China, right? And now India, and now it's global. So from mid 80s until the early 2000s, cities had this massive problem, all of these vacant industrial properties in the cities that nobody wanted. So they spent enormous amount of time, money, and resources, working with developers to convert the industrial into loft spaces. And I don't know in your area, but for example, the hottest area in Chicago right now, is West Loop. West Loop was the meatpacking district, right? In Montreal, it's Griffintown, which was it was like industrial district. That's like the hottest district. What is the area in Maryland that you're at that we used to be like industrial and now is like all apartments? I'm sure there's something like that where there's a bunch of lofts.
When you look at Baltimore, and you look at some of the outer parts of Baltimore along the coast, like of the Chesapeake Bay, rather, not the ocean. But when you look at like the points there on eastern Baltimore County, that's where you see a smart city being developed by Kevin Plank, the founder of Under Armour. He's developing Port Covington. That's where you see projects there where, like, that is a big industrial hub there, but it used to be rail yards. It used to be lumber.
That's right.
It used to be like wasteland, and now you see massive industrial warehouses with Amazon and FedEx, and then you see smart cities being developed, and then you see massive housing projects being developed there as well. So all of the above, but they used to be wastelands, and almost to a certain degree.
That's exactly what's happening. So now the industrial is having a resurgence.
Yeah.
Industrials having a resurgence. I also believe as a result of this whole COVID thing, I believe that small scale manufacturing is going to come back to the United States. So we're actually going to start looking at buying flex industrial, meaning, 200, 300,000 square foot building that could be subdivided into smaller spaces and offer it up to smaller manufacturers, suppliers.
Elaborate. Small manufacturing. What do you see happening there? Like what type of uses? What type of manufacturing?
Immediate things that you're seeing are masks, right? All the world's masks and PPE, or personal protective equipment, used to come from China, right? It was all produced there because it's low cost of goods. Now, and this is immediately happening as a result of the COVID spread, is companies like Honeywell, GE, GM are retooling their factories. They're renting smaller spaces to set up small operations so they can provide PPE out of the United States, right? Because we need to have control of it. I also believe with rising tensions between U.S. and China, and the increase in the shipping costs are getting more expensive now because of what's happening. Increase in shipping costs. I believe that a lot of the product is going to start getting produced in the United States. Now, supply chain is still in China. So to take the production to say we're not going to produce in China anymore, we're going to shift it all to the United States. That won't happen overnight. It's going to be a 5 to 10 year process,
right? Because
everything is produced there. But that was a 20-year process shifting it to China, or 30-year process going to China. So to come back, it'll be quicker. And I don't believe that we're gonna go into large scale orders that are not time sensitive. But anything that's time sensitive that you need produced in the next 3 weeks, 4 weeks, 5 weeks is gonna come back to the United States. Second thing that's even bigger, that's more immediate, is that world used to run on efficiency, meaning the retailers, and not just the retailers, but even B2B suppliers, will always carry least amount of goods in inventory, and they would order stuff as they needed it. Now what I'm seeing a surge in people keeping more inventory, because they're like, what if something else happens? We have a product that people demand, okay, but we don't have enough of it, and we can't expect China to deliver when we need it. So this is what's happening. So you're talking about distributors, suppliers, people are starting to stock more. I don't know if you want more flour and rice in your house,
right?
Or if you bought more meat.
You saw previously that point of sale greatly reduced the footprint the company would need, because they could have a smaller footprint because, number one, there's not as much, you don't have to manufacture things the same way. Like Boeing doesn't need to have, a 500-foot thing necessarily to develop a wing. They can develop pieces of it and then bring the pieces together. And if they need one piece, if they need one piece Tuesday at 8 a.m., it's going to arrive Tuesday at 7:55 a.m., that kind of thing. You're seeing, kind of a shift back to where we were before, where, so you see an expansion of space there. Interesting. Now, you mentioned that you see, a lot of small manufacturing coming back specifically in the short term for PPE and, the immediate need here, in terms of equipment, masks, and things of the sort. But what we also have as a society is a fast casual society where people want things really inexpensively. You see it with clothing is just the easiest example. Somebody wants to buy a piece of clothing once, not really wear it much again, and buy it really cheap. I mean, that's why Forever 21 exploded with this business model. Right now, they're doing they're having trouble right now, but not because of a drop in fast casual. And so the reason that that's able to happen is because this low cost of labor that you have in these East Asian countries, primarily China, but also Malaysia, Thailand, and similar areas around there. Even Taiwan has some manufacturing facilities that have lower costs of labor. Do you see a lot of those consumer products that we're just buying over and over again coming back to the United States in that same way, or do you think it'll just shift out of China?
I don't believe that the cheapest of the cheap is going to come back. Okay, but products like Everlane, meaning millennials that have a bit more money and they want a decent quality product that they can wear more than once, something that's trendy that looks good. That's what's coming back. Okay,
Yeah.
so products that are slightly better quality, okay, that can be produced in the United States. Maybe the margin will shrink a little bit, and smaller quantities. If you need 10 million pieces of something, it's still going to be produced in China. But if you need 50,000 pieces this week, okay, and then 50,000 pieces next week, but then you need 10 million pieces later, the 10 million piece order can be produced in China. It's the smaller quantities that can be produced in the United States. And you can kind of mix and match. We can mix and match what's being produced here. I also see, even with myself, I see a resurgence, and people around me, I see a resurgence of better quality stuff and less stuff. Right? You know, before, for example, I used to just go buy a bunch of pairs of gym shoes, and now I would rather buy one or two pair. They're more expensive, but they'll last me longer and they're better quality.
It's the European model, right? Everybody in Europe, they have the nicest stuff, but they only have a few things, right? In America, we have a million things and they're all inexpensive, relatively speaking.
Correct. And I see a mixture of that. I believe that people in the middle income range and a higher income range are going to go more for that type of a product, and then people in the lower income range are going to stick to what they can afford, right? But and like I said, I don't see the change in the supply chain overnight. Another thing you have to consider is China has raised their labor rates, right? Their minimum wage today is something like $550 a month, which didn't exist before, right? $550 a month is not necessarily inexpensive, right? And cost of living in China is rising. They do have supply chain, so it makes, you know, production lower cost, but the cost of production there is going up. They don't have the labor readily available anymore. The labor there moves as soon as there's a better opportunity. They move from one opportunity to another opportunity, and China's grown. Nice thing about China is they don't need United States anymore. They can self-sustain, right? They're big enough economy to self-sustain on its own. And I also see, maybe not to get political, I see U.S. starting to close borders more and have a closer relationship with Canada and Mexico, rather than far, like Canada or Mexico. Mexico has labor costs that are lower than China. So if you have the efficiencies in a supply chain, you can produce the lower end goods in Mexico. The difference with Mexico is you can sit in a truck and drive across the border and get what you need and drive back into the United States. You don't need to get on the plane. You don't need these big ships. So I'm seeing a change, like first in the PPE, and then we're starting to see a shift with suppliers, even the larger manufacturers. For example, I have a friend, Vitali. He's in cell phone business. He upgrades cell phone towers and does installations of new cell phone towers. U.S. has shifted to now 3 companies only. Okay, so it's Ericsson, Nokia, and Motorola. And Ericsson has shifted all their production to United States. So all of their factories are in US right now.
Wow.
Right? And that's huge. And now they're having a big surge because Nokia is having problem as their production's in China. So they're not being able to import the stuff as fast as they needed because of the logistical issues. So I believe there's going to be some qualitative and quantitative recalculations on stuff. So the stuff that
supply chain, yeah.
Yes, and look, U.S. is so deprived of, especially the primary and secondary cities in the United States are so deprived of quality industrial real estate. And the biggest challenge is that, it's not the lack of land. It's the lack of zoning for the land, and the zoning is not decided federally or even on the state level. It's municipality by municipality. So it's going to take some time for municipalities to decide, like, hey, we actually do want more industrial. I don't believe that, Washington, D.C. or Chicago or Montreal or any of these cities are in the mindset now where they're like, hey, let's allot another piece of land that's right next to the city and let's make it industrial, because industrial isn't sexy, right? So they want more, retail and more artsy stuff and more people living there, because those are the voters, right? So that's what's happening. So there's definitely more of a demand on industrial, and there's not enough. Like, the demand is higher than the supply. That's what's happening right now.
Yeah, without
and we're gonna see it more over the years.
Well, Ned, we're coming on our time here. Do you have time for one more question? I want to be respectful of your time as well.
Sure.
Awesome. So the final question would be Amazon, and of course, this could be a very long-winded answer. But how do you? I had somebody who owns some retail shopping centers, who's not over leveraged. He's going to be fine. He's going to ride this out. And he's looking forward to the future retail so he can buy all the people that were over leveraged and failed. But also because he sees a massive opportunity with Amazon taking retail space. And he thinks there's going to be Amazon stores all over.
Yes.
What do you think Amazon's impact on the retail space will be in the coming years?
I believe it'll be significant, but going back to my previous answer, right? I believe Amazon's going to position themselves into high traffic areas and the best assets across the country. I don't believe that Amazon's going to open up, a store in a strip center in a C-class neighborhood.
Sure.
Right? I don't see that happening. I believe that Amazon's going to be more of a Starbucks model. At least the Amazon stores that I've gone to right now is that they have a few goods there, but majority of stuff is online, right? So you can buy some stuff in the store, but their store is there really to promote product online for people who are not buying it. So they can touch it, feel it, see it, they can see the quality of it, and then they can be convinced to buy. So,
you don't need a space to have everything there because you'll just ship it to them later.
That's exactly right. So, like, if you go to Suit Supply, you try on a suit, because suit is like something that's custom to everyone, right? You try on a suit, you try on something that fits you, or they customize it for you, they measure it, you touch the material, you touch it, you feel it, you see the color, you put it on, and it looks good on you. And then you order it, and then 3 days later, it's at your house.
Yeah, that's huge.
Right. So I believe that's what Amazon's going to do. So do I believe that? And I'm a big believer in some of the retail coming back, and that's the reason why I put a few bucks and I bought some Brookfield stock. Brookfield is trading at way below book value,
right?
And same thing with us, like on industrial side, do I see some fluctuation over the next couple of years? Yes. That's why we're getting away from the model of buying one asset at a time and rolling out a fund to diversify the risk across multiple asset classes.
Cool. Well, hey, one last one what's the significance of the picture behind you?
Oh, it's you know what? I didn't even realize it's there. It's a building that we're developing in New Jersey. And as one of the, things that's got to do with COVID, majority of all the construction sites have been shut down.
Wow.
Right? I mean,
in Jersey specifically, because I think we're still up construction in Maryland.
Yes, but New York and Northern Jersey, yes, because of what's going on. Actually, everyone except absolutely essential businesses and businesses that are essential to like if there's a hospital being built, or housing, affordable housing, they can continue. And then we were challenged actually by the state. And I had another call about this. We were challenged by the state. So what we did was I actually reached out to some of our because we pre-rent some of the space. And I reached out to everybody that pre-rented a space. And I said, hey, what business are you in? And can you give us like some supporting documentation? So we ended up having a company that sells PPE that wants to store, stuff in our storage facilities. And what they like is that they can increase and decrease the space as they need to, right? Then we had a company that, Vitali's company, that installs cell phone towers. They want to store some equipment, which is also essential. My girlfriend's friend's company, who sells food, non-perishables to Walmart and Amazon, wants to store some goods there. So then we got letters from everyone, and we sent it into the governor and to the state and the city, and they're like, "Oh, no, you guys are essential. You can keep going."
How about that?
So,
that's awesome. Well, Ned, hey, thank you so much for your time today, man. I really appreciate it, and I really appreciate the insights.
Thank you so much, Cecil. Pleasure talking to you.
Absolutely.